Welcome to Your Bookkeeping Matters. I'm your host, Lisa Turner, a professional bookkeeper, registered BAS agent, and your small business cheerleader and mentor. I'm also a wife and mum to two little people. This podcast is for small business owners who want to manage their numbers the right way. It will be short and sweet episodes each week on business and bookkeeping matters in an easy to understand way with real quick tips or changes you can put in place, having a huge positive impact at the same time up-leveling yourself. So you can be in control and confident that you know your bookkeeping matters. Let's dive into this week's episode. Can you believe it is that time of year again already? Well, it is at the time of recording this episode. The end of financial year is only a few weeks away, so I thought it would be the perfect time to share some of my top tips to keep it nice and smooth for you. Because once it hits that June 30, there are just some things that are too late to do. And at the very top of my list to share with you today is tax planning. If you haven't already done one for this financial year, after listening to this, you might want to reach out to your tax agent and see if you can get yourself a quick spot for a tax review. But they, like me, could be quite busy at this time of year, and that is why my clients actually get a reminder in April each year to book in for a review. But listening to this in the future might be the perfect timing to either book one in or pop it in the diary. What is this tax planning for? It is for them to go through all your income and expenses and other deductions they can claim for you to work out an estimate of what income tax you'll have to pay for two reasons. One, so you can strategize with them on how you can perhaps lower any tax that you have to pay. And secondly, so that you know how much you're going to be up for and have that saved away. Some of the things they might look at: do you need a new laptop or a printer or any other assets that could be an instant write-off for tax purposes? And now I say could because not everything can be fully claimed at once. But that's what this tax planning session is for, and they'll help you with all of that. Or is there something close to your heart, like a donation to a registered charity? Something to be aware of here though, not all donations are tax deductible, and I'll link my blog on this in the show notes for you. Now, I never tell people to go out and spend money in June to save on taxes for two reasons. I'm not a tax agent, so I don't give tax advice. And secondly, spending lots of money to save a bit on tax is not a good business strategy. Spending $5,000 to save $1,250 on taxes just isn't good business sense. And also, don't go and buy things unless you actually need them for your business and you have the cash to support buying it. So once you know roughly how much income tax you're looking at, with all those things in mind and with the help of the tax agent, you can make some really strategic business decisions. My next tip to keep things smooth is to schedule in a stock take if you sell products, of course. And this is a really important step. You'll need it for your tax agent or bookkeeper for them to make those numbers of yours super spot on, and it will have an effect on the tax that you need to pay. When I say stock take, I mean do a physical count of each and every product that you have and make sure your records are super accurate. And now you know why you see end of financial year stock take sales popping up. So there's less to count come stock take time. So this could be something that you do as well in your business. Move some more stock to increase sales and get some more cash flowing into your bank. Speaking of banking, that is my next tip, getting your bank recs and books in tip-top shape. Because these are, of course, what you need to get your tax planning done and your tax return completed. If you have a bookkeeper like me on the tools, we have got your back and we'll be keeping you on the straight and narrow so that you know your numbers are good to go. If you're DIYing your books, make sure you set aside some time, more time than you usually would take to look after your regular bookkeeping, which you now do your books regularly since you've listened to episode 1 of the show. If you haven't yet, head back and catch that one, but set aside some extra time to make sure everything is up to date. No expenses have been missed and tidy everything up. because having it all as tidy as possible makes it quicker and easier, and you will save money on getting your return done if there's less for your tax agent to do. Your tax agent or your bookkeeper who does the reviews for you will also love you if you've been attaching digital copies of the invoices to your expenses, either in your accounting software like Xero and the others, or in an online folder that they can access easily, because they do need to check some of the things on the invoices to work out your tax returns. If you are on software, you can run a transaction report for the year to make sure you're putting everything in the right spot, because we're only human and we all make mistakes. Even here, we do a full review before every BAS is lodged and at the end of each financial year. Moving on, if you offer accounts to your clients on terms where they don't have to pay you straight away, make sure you're all over them and have chased in any overdue amounts. And you can also look at any that you might need to credit or write off. And the opposite of that, if you have expenses you haven't yet paid, check in on those for any that you might need to pay that are due or that you want to make the expenses count in this financial year. My last tip today, if you have employees on the books, make sure any super that you want to claim as a tax deduction in this financial year is paid and reaches the super fund before the 30th of June. This can be something that you ask your tax agent when you're doing the planning if this would be helpful to you. And if your cash flow allows it, most people do tend to pay up all the superannuation that they can, because any super that you have not yet paid is not a tax deduction in this financial year. Getting slightly more technical, while I'm on payroll and end of financial year, the financial year the expense of the wages is in is based on the date that you physically pay them. And that also determines the financial year that it's counted in your employee's personal income. It's not based on the date that they worked or the pay cycle date. So, for example, if your normal pay cycle ends on Thursday, the 30th of June, you should also pay them that day, because if you pay them on the 1st of July or afterwards, it falls into the next financial year's expenses and then also attracts the higher new rate of superannuation, something you need to keep in mind. Your trusty bookkeeper can help you work through those if you need them. Now, if you are DIYing those books and need a spreadsheet to track everything in, head over to my free resources page and grab my real easy P&L generator, where you can quickly plug all the figures in and it tracks it for you. Even if you hate spreadsheets, this one is for you. But once the financial year is done and dusted, I want you to have a think. Is it time to invest in some accounting software like Xero? Hint, hint. Because my advice is to always use software. It's such a time saver and so much more accurate. And I truly always want you to be on software. And there you have it. My top tips for a smooth end of financial year. This is, of course, all general advice and is not specific to your personal circumstances. So make sure you get individual advice that is relevant to you, as everyone's situations are different. If you found this helpful, hit subscribe so you don't miss the next ones, and I would be really grateful if you left a review on Apple Podcasts to help reach more small business owners just like you. Thanks for listening to these tips in your bookkeeping matters, and I will catch you in the next episode.